Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592, the website at allamericangold.com. And, man, every day now, be ready. You just never know. Oil exploding again today, $86, and, well, you know where it's going. I've been warning you. We'll tell you why. We had the bond market ripping to the upside today, and the Dow down 500 to 600 points. The Nasdaq's down almost 300 points. The S&P's down 70 points. Goldman Sachs. We had bad earnings from J.P. Morgan last week. Goldman Sachs even worse, and it's kind of ironic that those were two of the three banks that started the whole liquidity mess that we learned from the Martins through a Freedom of Information Act request of why it was that the Fed had to reverse track the last time they started quantitative tightening. And again, you got more money in the bank than you should. That's going to be on you. Make sure you do not, no matter what you do. And I can't believe people still do it. If you got more than the $250,000 in a bank, you need to open another account in another bank and move it. I mean, I wouldn't even have it there, but neither here nor there. These things, listen, this is uncharted territory. What's going to happen in 2022, I'm more convinced than ever. They are not going to be able to pull this off. The amount of money they've printed is just, it's not possible. They can't raise rates, stop the bond buying, raise the rates, start the tightening without putting the whole economy into a massive recession. But hey, let them hope and dream, right? I guess they can keep trying to keep their fingers crossed. Silver, by the way, big day in the silver market, up almost 75 cents here, $23.60 on silver. Gold was down early in the morning as bond rates were rising. It's come all the way back now. It is actually in positive territory, but basically gold's hanging out today on a day when the Dow is down big. The bond market not very happy. And again, I just don't see, right now if Wall Street's struggling with a bond yield at 183, 184, 185, what's it going to look like at 3%, 4%? Right, Jamie Dimon said we need 7 rate hikes in 2022. Jason, the math just doesn't look very good for Wall Street.
No, it doesn't. And I'll tell you right now, because as 2022 moves along, I think we're going to start to see more and more of this as they get done with the taper and as they start to push the rates up. And do they even get to the point where they're selling their balance sheet? As these things happen, anytime you see the markets going down like this today and you see gold flat or up a little bit, that's a huge day for gold, because when things start to sell off on a more accelerated rate, you'll see gold and silver sell off some days. But when it all comes down to the bottom, Joe, gold and silver are going to bounce up, and they're just going to keep on going, and the rest of the markets are going to sit there dying because there's not a lot of safe places to put your money when things go like this.
Yeah, and it's something where we had economic data out today. The New York Manufacturing Index went negative. That was not a good sign, right? We had slowing retail sales, right? Remember the retail sales numbers that came out, slowing retail sales. Now we have, at least from the New York manufacturing side, it went into contraction. So things like this don't bode well, right? It's already very clear, and it makes sense. Listen, they stopped pumping everybody, stopped mailing everybody checks, and all of a sudden now the economy was already slowing, throwing things like this onto the fire, and things can get out of control very, very quickly. We had our first layoff announcement. When was the last time we talked about layoffs? Peloton came out and said they're going to be increasing prices another $350. Wow. And they're going to deliver $250 in delivery service for its bikes and an additional $350 for its treads. By the way, they also announced that Peloton is closing stores, going to have layoffs. And again, when you start seeing things like that, you really start to get a little nervous because that's one of those extras, right? Hey, I've got extra money. I'm gonna buy a Peloton, right? I'm going to buy something. I don't want to go to the gym, right? I don't want to work out in front of everybody. I just wanted it, I got it in my bedroom. When I've got a few minutes, I can go work out. One of those extras, and already, Jason, I think a lot of these extras are going to be in trouble. We had housing, the housing index, the home sellers out there, confidence getting less and less as they're worrying about interest rate hikes, and that makes a lot of sense. But the big news of the day has to be in the oil markets. There was a small attack, I'm going to call it an attack, in the AUE from the Yemeni rebels, that same group with the Saudis. But there's actually... that's the cover story. I'll give you the real story when we get back. Patriot Radio News Hour. Don't touch that dial. 800-951-0592. Patriot Radio News Hour. Joe Jaquint, Jason Walker. Before the break, so we're talking crude oil. Crude oil ripping higher again today, and it seems almost every day here. Right now, back over $85. It's been as high as almost $86 today. Brent crude got to $88 today. The bigger piece behind this is OPEC. They're on a schedule where every 3 months or so they increase production. And this has been agreed to months and months and months ago. Here's the problem today. It appears, because there's only a couple of countries within OPEC that can even produce more oil. Saudi Arabia, Russia. Everybody else is running wide open. Matter of fact, Iran, who's not supposed to be able to send out any oil, is pumping 1.3 million barrels a day. The Chinese are buying all they can get. But there's no spare capacity, and news broke last night while we were asleep, that Russia is already producing all out. So there's the amount of spare capacity left in OPEC is down to just the Saudis, Jason, and that really has sent the oil markets higher again. Goldman Sachs, who reported, Goldman Sachs missed earnings badly this morning. I know their shares were down 8 or 9%. But they came out, and I just want to give you an update to their oil forecast. And these prices, I want you to know, these prices are going to be what Goldman says is the average price for the year. So think about this year. Oil started out this year, in the high 70s. Today's the highest point here at 85, between 85 and 86. But Goldman Sachs expects oil prices to average $96 a barrel in 2022, $105 a barrel in 2023. And Jason, why do I get the feeling it's only going to go up from there? And so just as everybody understands, in order for it to average 96, right? If we have let's just say this month, the average for January, the month's not over, but let's just say for the month, it averaged $80. Well, for it to get to 96, that means in February it would need to average like $110, and you kind of split the difference, right? So a lot of room left in the price of oil, which is, Jason, as we know, one of the things that immediately impacts the inflation numbers. Already shipping costs are through the roof. I think they're only going to get worse. It's going to make things a lot harder on everybody out there. As you know, at $96, everybody's going to be paying at least $4 a gallon, if not more.
Why do I get the feeling the numbers they're giving you, Joe, is a little lower than what they actually think is going to happen? Because they don't want to disturb the markets too much by saying, well, it's probably will average about 150 at the end of the year.
And it could be. That's the problem. That's why I said, we're at 85. Well, by the end of February, maybe it's at 88.
Right.
Right, and then March it's at 90, and then all of a sudden the driving season kicks in. Then April's 100, May it's 110, June it's 120, right? August it's 125, right? I mean, 96 as an average is a huge number. Just an absolute huge number. But to your point, Jason, that just means we're going to see oil prices well above $100.
You know who's got the largest oil reserves in the entire planet? Venezuela. They sit on more oil reserves than any other country in the entire planet. What I have a feeling we'll be seeing some Venezuela news here later in the year when the oil prices start to climb, Joe.
Well, let me tell you right now, maybe that's going to be the end of the Venezuelan sanctions. But again, I don't know how long it will take to get them up and running, right? As their oil fields, just like anything else, when you can't take care of the equipment, right? You can't, just simply turn it back on and have Venezuela. And even Venezuela, I think at the peak was doing a little over 1 million barrels a day. I'm wondering already in the back of my mind, because Iran just went out and just told the world, hey, by the way, China's buying all the oil we want. We're pumping 1.3 million barrels a day,
yep.
And they're buying it all. If Venezuela isn't already pumping quite a bit of more oil, and America just doesn't want to say it.
Right. Well, in Venezuela, because of sanctions, they got to hold on to as much commodities as possible. So that's another reason they probably built up over the last few years. But they're sitting in a fortunate position, and we all know that. I call him Guido. Guido's their guy. They don't want Maduro in Venezuela. They want Guido.
Whatever happened to that guy?
Oh, well, Trump. Trump had a State of the Union address. He had Guido there at the. I'm sure Biden may have Guido lurking about for when they decide to pounce on Venezuela, and if they can replace Maduro, Joe, then it's all the lumber and gold and oil that we can pull out of that country. At some point it's going to happen, because Venezuela is not playing ball with the central bankers.
Yeah, absolutely. Again, we talked about Peloton raising prices. Copper, Dr. Copper, expecting a huge rally in copper over, really, they're calling now for the next 6 years. For over the next decade. They're saying that copper demand is going to outstrip supply by more than 6 million tons a year. That's impossible. Right? I mean, that math doesn't work. I mean, you could do that maybe for a year or so, and then all of a sudden you're just not going to have enough copper, and the price is going to raise. But they're saying this deficit of magnitude is going to have massive ramifications for the energy transition. There is currently no substitution for copper in electrical applications. So unlike platinum and palladium, as an example, right? If palladium got too expensive, you could make platinum work. Right, and then if platinum gets too expensive, you can go back to palladium. In the copper industry, it does not work that way. They're saying copper demand is supposed to rise by 16%, with supplies falling by 12%, and that's 12% from levels from today. Jason, again, I don't know how the math works, but this transitory inflation nonsense the Federal Reserve was pumping right from the get-go was really just a bald-faced lie.
Yeah, the copper will not that industry will not have any kind of surpluses or any kind of prices going down if they're going to push with the green energy. If the green energy if they actually are going to do this more than just America, countries all across the world want electric cars and windmills, turbines, and all of the electrification of solar and all this. Copper is going to be a sad state, and the prices will just keep going up, Joe. That's one item that if they even fix the inflation somehow, copper price still go up in price if they're going to actually push the new Green Deal and actually go to electric cars. Because I think it's like I forget how many pounds of copper has to go into an electric car. It's a massive amount, much more than a gasoline car, Joe. So. Copper is going to be in short supply for a long time, and I bet there's a lot of guys out there looking for some new supplies of copper to dig up.
Yeah, and again, it's just the cost, vehicle cost, right? They're never coming back. You always hear, oh, well, used car prices they're going to fall, in 2023. No, listen, the only way used car prices are falling is if we go into a recession. That's the only way it's going to happen. And then, of course, the cost of vehicles. All these companies, listen, they've all committed to this electric thing. And I've been saying from the get-go, I don't know what they're thinking, but we'll have to see how it plays out. Something else to keep your mind on, little things that we don't realize. So our largest trading partner in terms of stuff, believe it or not, is China. They're number one. And really, that surprised me because I know we bought a lot of stuff from China, but Mexico and Canada are so close that I thought, well, maybe China would be behind those two. They're in front of Mexico and Canada, but Mexico, Canada, China. You take those three countries, and that is just a large amount of the amount of product coming from other countries, coming from those three places. Matter of fact, well over $1 trillion when you add all three together. This morning, and I did not, well, it's not this morning, next week, the cross-border vaccine mandate for truckers in and out of Canada goes into effect. And I only bring that up because they already tell us there's a trucking shortage, and now, Jason, they're going to make it even worse.
Yeah, what is that number? 80,000 truck drivers shortage right now. They could easily hire another 80,000 truck drivers if that were possible right now. So if you're looking for a job, that's a good one to start scoping out because there's no shortage of truck drivers, but. Joe, there's a lot of truck drivers that ain't going to get vaccinated. They ain't going to cross the border and deal with that.
And again, I misspoke. The Canadian border vaccine mandate is in effect. They're saying that the U.S. vaccine mandate, which I didn't know that this was still a thing, but maybe it is, takes effect January 22nd. The impact on the supply chain is going to be I think pretty significant, and again, it's going to be significant in certain things, right? There's the rail car stuff that probably won't be impacted, but whatever is coming across from Canada via these trucks, Jason, there's going to be an impact.
So I guess the mandate didn't pass the Supreme Court, but it's just a mandate. It's not a law, so I guess they could still put the pressure on companies like, well, we can't force you guys to do it, so maybe they're just getting a lot of volunteer companies, Joe, and some of these trucking companies are going to feel it here in America and in Canada. That's gonna be an extraordinary circumstance that's once again going to push prices of everything up.
I want to give you the idea because, I said to everybody, the family, right before Joey was heading back to school, we took a few days and we were out on the highway. And if you didn't know it, okay, so in other words, you never listened to Patriot Radio News Hour, right? You had the sports station on, or you listened to the bebop stations, or whatever it was you were doing. You just didn't turn the news on. You would have no idea that there was a trucking shortage. None. They're everywhere. But here's the thing that's amazing. Just what we're talking about. Trucks crossing the border from Canada into the United States. A slow day. 16,000 loads. So 16,000 semis. A regular day, so, I'm picturing that's weekend, right? Saturday, Sunday. During the week, 38,000 loads a day and is coming from Canada, Jason. This is going to have a huge impact.
Wow.
I mean, even, think about it. Even if just 10% of them weren't going to do it, that's a huge amount of loads that aren't going to be delivered.
Plus the fact that these companies are going to have to try to adjust to that, and what is that? What kind of problems does that cause too, Joe?
Yeah, things are going to get better before they get worse. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. I'm looking through the comment section here. 20% is what the Canadians put the number at. 20% of the truckers are refusing to comply. There were several replies from trucking. One trucking company said, hey, listen, we've got 10 drivers that do the cross-border. Only 3 agreed to be vaccinated. And they're talking about this is going to have a huge, huge effect in food, building supplies, automotive parts. Those are the 3 of the biggest areas where we're going to see trouble there. How about this? Shay Byers, CEO of a produce company, a major produce company that does onions, watermelon, and asparagus. They're on the Idaho-Oregon border. They have actually stopped shipping, saying that the cost of transportation has skyrocketed, and they said that they typically ship their products to the East Coast. So they go from west to east. We used to do it for about $7,000. They're now saying cost start at $22,000 and go up from there. ConAgra, that is bird's eye frozen food. So if you're one of those, you buy your frozen foods in the freezer sections of the store. Their CEO, in an investor call late last week, said that supplies from U.S. plants will be constrained for at least the next month, if not longer, saying that there are just not enough workers to package and get the foods ready for transport. Again, there's just not enough workers for what you want to pay. Believe me, there's enough workers. There's workers out there. And they're going to go where they get paid the most. I mean, it's really just that simple. I mean, we've talked about it a lot. Where are all the cries for no workers? Outside truckers. By the way, that trucking job, and Jason kind of said it pays pretty well. The problem is you got to suffer for the first year or two, and then trying to do it on your own is next to impossible. But a lot of these places like Walmart, they pay big bucks. But now ConAgra says get ready for more empty shelves. Albertson's CEO in a conference call said that the supermarket chain's efforts to combat the supply chain issues is failing, and they say that over the next 4 to 6 weeks they expect even more problems for the supply chain. For, of course, Albertson, that's Albertson, Safeway. They own Jewel in the Midwest. There's really only a few supermarket chains out there. You got Walmart, you got Kroger, you got Albertson, Safeway. That's probably, if you added those 3 companies together, that's probably like 80% of supermarket sales in the United States, Jason. And the list just seems like it goes on and on and on.
Yeah, if we had dependable driverless trucks on the road right now, the vaccine mandates may actually be in effect everywhere, because right now those truckers, they don't want to get vaccinated. They actually hold a lot of power when there's tens of thousands of shortages in truck drivers across the country. And they're not going to go into Canada with, hey, I'm not going to get vaccinated. I'm not doing it. I'm not going to go into California with all the regulations they have there. So trucks are just stopping on the California border. They're dropping their loads there and going to get the next one. I tell you, man, if we get driverless trucks going on, Joe, and driverless cars, and you get the electric, dream of the liberals, then you may see a whole different type of society. So the truck drivers are kind of holding the line for us a little bit, Joe.
Every day, they still put out the COVID cases in the U.S. and the deaths, and you'll notice how no one's really saying the numbers anymore. Have you noticed?
Yep.
Right. The fearometers everywhere. You still say, "Oh, hospitals are overloaded, schools, this, that," right? But you're not hearing the numbers. Let me give them to you. These are today's numbers, okay? 712,051 cases, and I say today, these are yesterday's number being reported this morning. 712,051 COVID cases in the United States. Last year, same day last year, 170,000, okay? So you're like, wow, this is crazy horrible. Deaths, 774 was the reported death toll for yesterday. Last year, 1,730 was the death toll. So, again, I want to, obviously two things. Number one, highlighting how much less deadly the new strain is, and my guess is most of these 774, if not all of them, are still the old Delta stuff. But to give you an idea of the percentage, 0.0001. And really, I only have my calculator go out 4 places, so my guess is, why do I feel like it's probably 0.00006 or 7? They just round it up, but this is less than the flu, Jason.
Right, and that's if you trust the what they're counting as a case and what they're actually dying.
Right, that's giving them all the benefits of the doubt.
All the benefit of the doubt.
Right, I mean, this gives them all. It could only be better. It can't be worse. I mean, this gives them all the benefits of the doubt.
Yeah, and then there's a lot of people getting sick, but I mean, there's been other years where a lot of people get sick, and so it's they're losing their strength of their message, Joe. But I'm sure they'll concoct some other emergency and put a lot more stress on us. Well, everyone wants it to be over, but I have a feeling it's just not getting over, and it's just going to continue to happen, and then we're going to have to continue.
I mean, listen, I've been saying it. Everyone's lost their mind. I mean, do you hear the whole voting thing? Have you heard about that, Jason?
Yeah.
They're all upset at Sinema because they wanted to get rid of the filibuster because apparently presenting an ID is too big of a requirement to vote.
I have heard that. Yeah, we talked about that yesterday.
I mean, everybody's lost their mind. Are you kidding me? That's restrictive, right? And again, we're all the things that we're doing. I mean, from COVID to green energy to take even voting rights. I mean, the voting thing, whatever, right? That doesn't affect the financial stuff, but it does if you get the wrong people elected. But neither here nor there. Look at these other idiotic policies. I mean, the people are out there saying, listen, there's no way the world has enough copper to do this electrical thing. And I mean, it's only like the 5th or 6th different item they've said, hey, that's not possible to do. But hey, we're going to do it anyway. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe Jaquint, Jason Walker, as we opened up the show today. Wall Street suffering. Goldman Sachs missed earnings pretty significantly. They were expecting like $11 a share, came in at $10 a share. Not been a great start to earnings season. J.P. Morgan kicked it off last Friday. they had bad earnings reports as well. The Dow's down 525 points right now. The bond market, 185 on the 10-year note. And it sounds so insignificant, but that's one of the highest 10-year notes, Jason, in at least 3 or 4 years. And again, I think there's only a brief moment, maybe, and I could be wrong, it may be the highest since the financial crisis, but we're getting to this point where the fact is that we said the Fed has put themselves into the corner, and now all of a sudden the rubber's going to meet the road here. The bond buying program is going to come to an end. By the way, the Fed did announce, and this is kind of scary, they had technical difficulties today and weren't able to buy the bonds they were supposed to buy today, but they said they'll buy them tomorrow, Jason.
Yeah, I mean, the markets have been, I mean, a lot of the equities have been in bear market territory for a while. It's been sideways since May. In May, it was, I think the Dow was 34,700, 34,800. So really, the Dow's only up like 400 or 500 points since May, early May of last year. So the big cap stocks have been holding the weight of the markets up, and it's just not going to last forever. And if you've been trying to play the market and buy these cool little stocks, you've been probably losing and losing and losing. You know, all those guys you go to YouTube and other places to get advice for buying stock, they're all losing. They're all losing because they picked these stocks they thought were going to be great, and these smaller companies aren't cutting it, Joe. They're losing. They're losing their value, and just takes a little push for Apple and Microsoft to start losing their value, Joe.
Yeah, well, I'm going to say this right now. China's President Xi made an address calling for the United States not to raise interest rates. And it was kind of interesting because really what it was is twofold. Number one, trying to, again, drive that wedge to, there's a lot of the countries of the world, they have a lot of dollar holdings. Yes, they've been lowering their holdings, but essentially saying, look at the pain the United States is going to cause you again. And, of course, we're coming out and telling them not to do it because, right, and again, a little gamesmanship by the Chinese president this morning, Jason, kind of saying, hey, listen, aren't you getting tired of what the U.S. keeps doing to you? We're here to help you. Matter of fact, China just lowered rates.
Joe, we talked about Evergrande for a while. We haven't really been there for a while, and some of the bigger because Evergrande's not the biggest property company. They have bigger ones that are starting to not pay. They're starting to go to default, and now one of the Chinese banks, I forgot the name of it. I saw it last night. I should have wrote it down, but one of the Chinese banks that supports these big property companies is now showing a whole lot of stress, and that contagion is just slowly leaking out there. And I think that's why you just announced China saying, "Hey, man, you better watch what you're doing. Things don't look good here." You know, they're worried, Joe. Their biggest asset class, which is property, is going down hard right now.
Yeah, and there are a lot of issues in all of this, and this whole thing. And again, you got to remember the whole thing being held together by a lot of cheap debt. And when that cheap debt goes away, then you start running into a lot of problems. And as Jason pointed out, the problems in the Chinese housing market, just one example of all of these things coming out. The Country Garden is the name of the company Jason was looking for. It's not imminent pressure. The bottom line is, I wouldn't be surprised. I think the Chinese housing market's going to see an adjustment to the downside. It's going to put, again, more pressure on the global economy as it sits already. And I think, again, this is just another one of these things where all of a sudden now, for the first time really in recent memory, and by recent memory, go back 50 years, that there's another country out there that if they have an economic problem, it's now a problem. We used to be so much bigger than everybody else. Japan, take Japan. Japan, for years and years and years, was the number 2 economy in the world. They've only got a $5 trillion economy.
Yep.
That's it. Germany, I don't even know what their economy is. $3 trillion. They're so small and relevant. But the Chinese, the Chinese just reported they had 8.4% GDP growth. I want to say their economy in dollar terms now is approaching 18 trillion, right? And we're at, 21, maybe let's call it round up. We'll call it 22 trillion. And you see how close us and China are in dollar terms. Of course, China in terms of stuff is number 1. But this is another issue. I think we're headed into this a horrible situation where the Fed's going to put us in a recession. China's going to be having their own little problems at the same time, and this thing's going to get nasty. That's just what I fear.
Joe, what do you think is going to happen to the Chinese stressed housing market when the United States goes up a half a point interest? Right? They have $62 trillion in their housing market. Just get a 0.5% interest pushed by the American banks and other world banks. Well, what about 1%? What would that do to China, Joe? This stuff crosses
Heaven
over.
forbid, right? What about 2, 3, 4%? Of course, none of that's actually going to fight inflation. Patriot Radio News Hour. We're going to be back right after the break. 800-951-0592. I got a little special today. We've got 10 rolls of Morgan and Peace dollars. And these are going to be circulated. None of them are horrible, but they're circulated. These aren't AUs, and I'm going to tell you right now, I cannot believe the pricing. It's just incredible what's happening in the actual physical silver markets. But I'm going to give you a great deal. I've got 10 rolls. They're going to be all mixed up. $660 a roll. And let me tell you why it's such a great deal. Just the Morgan dollars in there are worth, or would cost me more than the $33. Matter of fact, a pre-21 Morgan, I actually thought it was a misprint. So I had to call. I'm like, that can't be right. No. A pre-1921 circulated Morgan dollar right now, my cost, $38.25. Jason, I'm dumbfounded by that.
That just shows you the shortage in the actual physical silver market, which hasn't shown its colors yet. And boy, what happens when it does, Joe? What happens when the silver market starts to show the physical price? It actually gets priced correctly.
That used to be at least $5 more than what a BU Morgan dollar was. Maybe even $10 more than what a BU Morgan dollar was in early 2020. That's how impressive the rally is, and the demand for these old dollars. Even the worst. I'm talking the worst of the worst in the. And it doesn't matter, Peace or Morgan dollar, over $30. It's crazy.
Yeah. It was about a month ago. We sold those Mint State 65 Morgans that I have here. I still have some of those, Joe, and we were selling those.
Those are incredible.
Yeah,
I was selling those at over $20 below cost.
Correct. Yeah, I still have some of those floating around if everyone's interested. But it's hard to get these coins. It's hard to just buy silver in any physical form. It's just not priced the way it should be. And man, I can't wait to see when that actually starts to go, Joe, because it's going to be remarkable.
Interesting move today. We'll see how it goes. Silver above $23.50, up about 60 cents today. One of the best performers in the market today is everything. Wall Street is down big today. Crude oil broke $85 a barrel, almost got to $86 a barrel. Goldman Sachs says, hey, get ready. It's going to go a lot higher than that. Right now, gold's down $2 right now, but has been sitting pretty flat most of the day. And like I said, silver up 60 cents. So we had 10 of these rolls. And pick them. It's just value. This is just value buying here. Silver, it's not a matter of if, it's just a matter of when. When does the adjustment occur? And when we looked at the shorts, remember we did that show, was it a week and a half ago, where Bank of America was shorting 800 million ounces, which was like 26 years of U.S. mint supply, some ridiculous amount. But a lot of us had that feeling they were starting to unwind that. I think 2022, you're going to see silver be one of those outperformers.
Yeah, I don't see a down year in gold and silver at all. It's news sensitive, but when it goes, Joe, I keep saying it. When it goes, this is the good old days. These are the prices you got to buy this stuff at, and then you miss out. Then you got to wait for the next sweet spot. But right now, we're there. It's cheap silver. It's cheap gold right now, Joe.
Absolutely. 800-951-0592.